We are always worried about, is our money going up or is it going down? Well, by the end of this video, we hope that you will have 5 assets that you should never have to worry about. My name is Carmen.
And I'm Darius. And when it comes to worrying about our money going up and going down, if you're not a part of these 5 assets, or at least when your money's going down because of inflation, inflation is going to be the thing that reaches into your pocket and devalues your dollar just as you have it, holding it in your hand.
Somebody just grabbed a dollar now. It's the silent thief. That's what we call it, right?
And in this past years, 2023, we've seen hyperinflation where we've seen things go up significantly around us. Restaurants, food, groceries, those things have gone up significantly without us doing anything. So what assets do we need to make sure that we don't have to worry about money, at least those things? Well, the first thing we have to understand, or asset that we need to have, is paper assets. Paper assets include stocks, different currencies, bonds, money market funds, and mutual funds, and life insurance, which is going to be a topic of conversation. But these are paper assets that you need because you need access to cash. What access to cash gives you is the ability to create cash flow or generate cash flow from different ideas you may have. And cash is king. And in order for you to invest, you have to have cash.
And I think something that you just said, access. When we recognize that having cash just gives us access, that's when my mind shifts specifically as far as having liquid capital on hand. Because if you can really just focus in on the tool that money is, instead of making it emotional, and recognize that the access that you get, it's like taking the velvet rope off the little chain thing. It's like, hey, you get access because you have capital. And when it comes to investing, I can't tell you how many times we had to pass up investment opportunities because we didn't have the access, right? So what we want to share in this video is just getting you to rethink about money as a tool to getting you what you want, right? At the end of the day, because what we all want is something that's called financial freedom, but it looks differently to everyone. Financial freedom to the next person could just be an extra $500 in their bank account, or financial freedom to the next person could be millions of dollars in their bank account with tons of cash flow coming in. So as long as you understand these 5 tips that we're giving you, or these 5 assets, this will put you in the right position that you need to be in to understand how to create what financial freedom looks like for you.
And I like what you said, that money isn't emotional. We can de-stress our financial life or situation when we detach emotion from our money. The only emotion that money has is the emotion that we give it. And just like Carmen said, it's a tool. Tools are dumb. They're meant to be used, like a hammer or a wrench is meant to be used for a specific purpose. Money itself is meant to be used to make more money. So we need to detach the emotion from money and use it for the dumb tool that it's meant to be used for.
Tools are dumb. I think they're very strategic. They're very helpful.
They only do one thing at a time.
So let's not be so hard on tools. But I get what you're saying. And essentially, so the idea is, let's calm our emotions, because our emotions can keep us from making strategic plays or really understanding how to leverage our money, because we're so caught up in this emotional spiral that we can be in, right? We've been there. Lord knows we've been there. So if anything, it's taken us a long time to really understand how to not be emotional with our funds.
Yeah. And honestly, I think we're still there when it comes to certain things, because when you add another zero onto it, it changes the conversation and changes your feeling or how comfortable you are around a specific deal. So I think we're still there, especially when you add a zero to a conversation.
Yeah. And your triggers, you never know what your triggers are.
Right. Now, the next thing is business ownership. In order for you to generate cash flow or continuously generate cash flow, you should have some type of business ownership. Now, the reason why business ownership is so important is when it comes to taxes. When personally, we have a handful of write-offs. We have a handful of tax write-offs when it comes to us.
More than a handful. Personally. Okay.
But when it comes to a business, we have hundreds. We have more opportunities for us to put ourselves in a financial situation where our taxes can be leveraged, or it can be changed a little bit in our favor, where we don't have that with us personally. So that's an opportunity to make money in itself, just by being able to reduce the tax responsibilities that you have by having a business.
Yeah. And for me, when I was thinking about business, as we were going through this script before, with a business, what I recognized as we were building our own businesses is just the asset that we create. As long as your business is generating revenue, right, it's going to be an asset to another person. So when we look at assets, people always want to buy and sell assets. I never thought about, in a grand scheme of things, with a profitable business that other people might want to buy it from me, right? And that could appreciate. So it's really interesting to just see the different plays that you can take with business. One, having amazing access to tax opportunities. And then the other one is having access to people who may want your business and that you can sell it for hopefully a larger profit.
Yeah, especially when you have access to cash. Maybe you can purchase a business that's already operating and creating cash flow, and you can buy that and that become a part of your portfolio. Now, one thing that I when it comes to taxes is the fact that personally we pay taxes up front before we get paid.
Personally, yes.
With the business, we pay taxes after we've paid all of our bills. So let's think about that. The next asset
that was a big nugget. I don't know if y'all heard that. I don't know if you heard that. We didn't understand that until we were in a business, and we're like, oh, this is different.
Now, the next asset that we think everyone needs so they don't have to worry about money again is real estate. Real estate is an opportunity for you to...
What's so funny?
Well, so when I say real estate, a lot of people think that their home is an investment, right?
Yes.
But assets put money into your pockets and liabilities take money out of it. So when we talk about real estate, we're not talking about your first mortgage or your second mortgage. We're talking about revenue generating real estate that you have renters, you have you're doing Airbnb, whatever you're doing that's creating cash flow. That's the type of asset that we're talking about when it comes to real estate. So don't get it confused.
Don't get it twisted. Yes. I'm glad that you said that, because it is easy. We're programmed to think that the home that is over the roof that we have, that is the asset. But really it's not. If we're paying a mortgage payment, we're paying landscaping, we're furnishing the house, we're heating and cooling the house.
And living in it.
That's taking money out of it, out of your pocket, as opposed to putting money in your pocket, which is an asset. But we talk about this a lot on the channel.
Right. Yeah. So if you have all that, even if you have a mortgage and you're not living in it, you have somebody else living in it, and there's money left over, that's cash flow. But the house that you're living in right now that you're paying money for out of your pocket, yes, it's appreciating, but it's taking money out of your pocket for you to maintain that house that you're currently living in. So to us, that's a liability.
Well, let's take a moment. We need a moment of silence for those of you who are just hearing this information for the first time. It's hard to take this moment to hear this information, because I think when that first clicked to us, we were like, I'd be damn. And we were hurt. We was hurt, real hurt inside. Like, well, what do we need this house for? But again, it's just to get you to think about things differently. So if you have a home and you didn't realize that your home is not an asset that you're currently paying mortgage payments on, maybe let's start thinking about how you can turn this around and have somebody pay you. Can you move somebody in the house and start paying you rent? How can you utilize your home, because you're on the hook for it? You got mortgage payments. How can you use it in a different way to generate money?
You can at least have an office space in your home for your business.
Something.
Now, the next thing is number 4 is debts. Debt is huge, because what debt allows us to do is, well, let's think about debt in the first place. Look at all the debt that we have. That's money coming out of our pockets. Our liabilities are an asset to somebody else. That's why debt is so important. When we take a look at the banks own real estate. Real estate is considered a debt.
Yes.
So banks are making money from that debt. Banks are making money from credit cards. Banks are making money from personal loans. Your kids going to college. Banks are generating opportunity for themselves by debt. So the reason why I said this is important, because one of the biggest debtors in the world is the United States. Obviously, they know something that we don't, because that debt calculator keeps going up. So I think it's really very important for us is to have that mailbox money generated by somebody else, because of us having access to money, lending it to someone or a business so that they can start paying you interest on your access.
Yeah, and these are things that we talk about all the time on the channel, right? Debt, we say it all the time. One man's debt is another man's cash flow. So when we think about this money game, it's just about putting on a different lens. I got my glasses right here, right? We're putting on a different lens. We're looking at things differently, because we have to understand this money game. And so like Darius was saying, debt. Somebody has the debt. The U.S. government has a ton of debt. And the banks have a ton of debt. And somebody we're paying it, right? Because we have to pay our credit cards, we have to pay our mortgage, we have to pay our personal loans, our car loans, whatever the case may be. I think I was reading some statistic that said all consumers have at least 2 credit cards, a mortgage, and a car note, right? So average. If we think about that from a standpoint, we are all paying debt to the banks, and they're reaping all of those monthly payments. And guess what happens is if you default, what's happening? They're going to collect on your assets and keep the party moving again to the next person.
They're going to move it to somebody else so they can start over where you left off. Or no, start over from the beginning.
So again, these tips that we're sharing with you are all opportunities for you to think about money differently and figuring out how can you bring this into your livelihood on your own scale, right? Because you may not just be able to create, millions of dollars of debt, but can you lend $1,000 to somebody? Maybe lend $10,000 out and try to figure out how to start flipping money from a different perspective. So we already talked about paper assets. We talked about businesses. We talked about real estate, debt, and then the last one is insurance.
The last one is going to be life insurance. Life insurance is very important because it's in the category, it's a subcategory, paper asset, but what it allows you to do, it allows you to borrow money, OPM, so that you can invest in a business, so that you can buy real estate, so you can lend money to create debt for other people.
And what Darius is talking about specifically is whole life insurance. So if you want to know more about that, definitely click on the link below. We would love to serve you at Wealth Nation and hook you up with a life insurance policy.
Thank you very much for that commercial. So one thing that is guaranteed for us is that at some point that we're going to pass away, and a lot of times when it comes to life insurance, people focus on that specific thing, having protection for if something was to happen to me, my family's going to be protected. But you can also use that asset while you're living to leverage OPM or the insurance company's money so that you can pay a low, simple interest, 4%, 3.75%.
At the time of making this video.
At the time we're making this video, we're just going to say 4% interest.
Our personal policies only. Disclaimer.
4% simple interest. Whereas when you get debt from the banks, like a credit card, for example, they're going to charge you interest on a daily compounding rate. And then every single month, you're going to have to make a payment. When it comes to insurance, you have more leeway when it comes to how you pay that back, and more freedom. It gives you freedom to match your debt according to what you invest in, and you can't do that with money that you borrow from the bank.
Gosh, you know what? When you just said this, I just had this epiphany moment. So thank you for letting me share this epiphany moment with everyone that I'm realizing right now. We talk about this all the time, but it hasn't quite connected. So I hope that I blow your mind too. You're probably gonna be like, I already knew that, but for my moment right now. In order to pay back a loan with a whole life insurance policy, say you get a loan from your cash value, and the reason why you have the freedom in order to pay it back is because the life insurance companies already have the money on hand in order to pay your death benefit, right? So they operate off of Austrian economics, meaning $1 protects $1. So if they're going to offer you a $500,000 death benefit, it's because they have the money on hand to know that they can cover that money should something happen to you, Jimmy, Susie, whoever is getting life insurance. They offer a policy because they know that they have the funds to cover it. But when we think about a bank, for example, the difference is why they collect on you, why they have these certain stipulations is because they don't have all of their dollars on hand. So if you default a few times, of course they got to come pick that car up because they got to keep their money moving because they don't have all of the money on hand in order to be able to continue to lend out. Did you ever put that together?
Yeah, but it's nice that we're having this conversation for everybody else who may not have come to that point.
Yeah, it's like you know this, but then you put it into perspective because the minute you said freedom, it just like came into my mind. I was like, oh yeah, I don't think we've ever said it that way.
Okay. Thank you very much for sharing.
You're welcome. Glad I can be here. Now, with life insurance, the asset that it is one thing, ensuring that your heirs have money should you pass. But the other part of it that Darius was talking about is understanding the living benefits with whole life insurance specifically and what you can do now while you are living. There are many, many riders out there that help you with income protection, that help you with getting more cash value, that help cover your premiums. Like whatever it is that you think that you want, it is important to make sure that you align with a life insurance agent that's going to educate you and give you all the information that you need to ensure you have the product that that meets all of your needs. So again, if you need help, definitely click on the link below. Our team would love to serve you.
Right. And not just with your insurance needs, but also with your retirement needs or your investing needs, your real estate investing. We have agents that are not just insurance agents, they're also financial advisors that help people generate income for their future.
And it goes back to point number one, where we were talking about the paper assets and being able to have your money invested, whether it be stocks, bonds, mutual funds. And what Darius and I recognized as we were creating Wealth Nation, we wanted our clients to be able to do more with their money, because once you get your policy and you have your cash value, what are we going to do? Are we going to invest in real estate? Are we going to invest in the market? What are we going to do? So we wanted to make sure that we could provide more opportunities for our clients with regards to investing. So again, definitely click on the link below so you can meet with our team if this makes sense for you.
Right. And if you want more information on how to invest your money, let's say you invest your first $1,000, then check out our next video where we're going to be talking about how to invest your first $1,000.
And don't forget to own your own lifestyle,
or someone else will.